In this week's episode of the Stockscores Market Minutes, we'll talk about the importance of process in trading. I'll do my regular weekly market analysis. We'll do some market scanning and evaluate opportunities and look at the trade of the week on BPTH. All right, welcome to the Stockscores Market Minute. So let's talk about the importance of process in trading. You know, you can have a great strategy with great rules and it maybe works really well when you backtest it, but without the process to identify the trades in a timely way and to properly size the position for your risk, to then monitor the position, to determine when you should be exiting the position, and ultimately doing the post-trade analysis, collecting the data so that you can learn from the trades that you make. Without all of those things, a great strategy is really nothing. And so I think oftentimes traders are really focused on when do I buy, but not how do I find the stocks to buy, and then how do I manage the trade once I'm in it. And really, that's something you want to pay particular attention to in order to really maximize your total profit potential. All right, let's get into this week's market analysis, starting us off with the US markets. And of course, we always begin with the S&P 500 on the 30-day, 60-minute chart. And you can see that that upward trend line was broken. That does not mean that we are likely to go lower. It means that near term we go sideways. And the reason that that happened is because the market hit resistance from the highs of November. And we've been going sideways underneath that resistance ever since. We had a pretty big gap up on Friday, but it did not get through the resistance level, and therefore we had the market sell off and then come back. So what we're doing right now is building what's called an ascending triangle. That's a pattern of optimism. And as long as the rising bottoms are in place, there is optimism in the short term. But until we can break out through that resistance level, we really don't have anything. So what you want to watch for near term is, do we break through resistance, or do we break that cycle of rising bottoms and instead break that upward trend line? What you're getting right now is a compression of volatility, and that's like a coiled spring. And when it breaks, one way or the other, that will telegraph the next leg of the trend. Looking at the longer term chart of the S&P 500, this of course the weekly chart, you can see that the market has rallied very nicely off of the lows from the third week of December and is now stalling at that resistance from the highs that were set in October and November. Will we break out? Then if we do, we're going to head back toward the all-time highs. But if we don't, if we instead break that upward trend line, we could see some pretty significant selling pressure again, perhaps going down to the 260 level on the SPY. So it's a real thing to keep an eye on this coming week. As that volatility compresses, we should get a break out of that compressing volatility pattern. Looking at the Russell 2000, which is the small cap chart, and of course the small caps have actually been doing quite well lately. I've seen a lot of opportunities, as I'm sure you have, in those lower price stocks, the kind of stocks that tend to make bigger percentage moves, and they're actually a lot of what's driving the performance of the market, because we are not seeing great performance from some of those mega cap stocks like Amazon and Apple and Facebook, those big name companies that were leading the market before. They're actually lagging now, and the market is being led instead by the smaller companies. Here you can see that on the chart of the Russell 2000 ETF, we had a little flag break on Friday, much like the overall market did, but we still haven't got through that resistance level. Didn't draw that perfectly, but you get the idea, maybe more like that. And so if we can follow through with a breakout through that, then we probably are going to head back up here, and you can continue to enjoy the strength that we've seen in those lower price stocks. Real critical time though, we got to either break through that resistance or watch for a break of the upward trend line, because if the upward trend line is broken, then we probably see some profit taking, and that could take us down into those support zones. All right, moving along to the Canadian markets, starting off with the TSX 60. And much like the US market, it's been headed sideways, but without the optimism that we see in the S&P 500. You can see that this is what's called a rectangle pattern, maybe even a little bit of a descending triangle, as these tops have been falling somewhat. A little early to call it that, but nonetheless, it's not as optimistic a pattern. There are concerns in Canada about possible issues with the government, with the oil market, not being able to get oil to market. All of these things actually hurt the Canadian dollar, and we saw real strength in the US dollar. We'll talk about that in a moment. Looking at the longer term chart, very similar to the S&P in that we've had that great bounce back and we're bumping up against some resistance now. If we can break through that resistance, we should see the old highs. If instead we break the upward trend line, we're probably going to see a round of selling pressure. Either way, volatility looks to be coming soon. And looking at the microcap market in Canada, nice pattern here. This is an ascending triangle, few stages that we always look for. Break of the downward trend line, that was step one. Build a rising bottom. We've been having that over the last 2 months or so. And now what we want to see is, do we get a breakout from that rising bottom? If so, money flowing back into those microcap stocks. And certainly this is the time of the year when it tends to happen. You know, stock promotions, the things that drive these microcap stocks, typically run late winter into spring, usually culminating sometime May, June. Market shaping up for that. So if you like to trade those microcap stocks, be on the hunt for opportunities. All right, on to currencies, and this is an important section this week because we had a pretty big jump in the US dollar. I've talked in the last little while about some of the weakness that we had seen in the US dollar and perhaps signaling that there was going to be a breakdown in the US dollar, and it still could happen, but on Friday we had this little pullback break here from a rising bottom after some bearish signals. We had the first one there, and then this formation of a falling top. We talked about that last week. But this break from a rising bottom could be telegraphing actual strength in the US dollar. Perhaps we get back to the old highs. We still got to get through this high level here. But you know, that jump with some volume on Friday is something to keep an eye on. And it really hurt the Canadian dollar. This is the weekly chart of the Canadian. That last chart was the daily. But just to show you how that long-term downward trend line is still in place, we talked last week about the potential for the Canadian dollar to break that downward trend line. Hasn't happened yet, and in fact on Friday we had some pretty good selling pressure in the Canadian dollar, and that could be indicative of this downward trend line holding, and actually we end up moving back down toward the lows, the local lows anyway, for the Canadian dollar. Of course, if we can break the downward trend line, then that's a bullish signal, but for now remain bearish on the Canadian dollar. Moving along to interest rates, that strength in the US dollar, related to the fact that the US bond market sold off, which means interest rates went up. And of course, if interest rates go up, then it makes owning the US dollar more good for investors because they can collect some return in the bond market. If the bond market goes down, interest rates go up. Makes money move into the bond market in the US dollar denominated assets. And so that's one of the reasons why we saw this sell-off. You know, was the tail wagging the dog or was the dog wagging the tail? I don't know. Was it the US dollar that caused the bond market to go down, or was it the bond market going down which made the US dollar go up? Hard to say, but either way, interest rates rose last week, and that could be an indication that we're going to see further raises in rates in the US as the bond market moves lower. On to commodities. Again, strong US dollar. What does that do for commodities? Well, of course, it makes commodities more expensive, which causes their price to drop. And you can see that in the chart of gold. We've had a nice upward trend in gold for a while. I've been advising that we could be getting near the upward trend because that gold market, which has rallied for 4, 5, 6 months, is getting close to resistance. Well, it never actually hit resistance, but we have broken this upward trend line, at least in that time frame. Now, the longer term trend line is more like that. And so maybe we only pull back for a week or two here and then make another run at those old highs. But certainly the breakdown in gold late last week is a negative signal for gold. And I would be cautious with some of the gold stocks because this could be the start of a further pullback in the price of gold. Looking at oil, it caused a little bit of weakness. This, again, the weekly chart, it doesn't stand out so much, but there was some selling pressure in oil on the Friday session. Wasn't real strong selling pressure, and oil is still in its upward trend there, but there was a little bit of weakness there, and I think if US dollar continues to strengthen, we could threaten that little bounce back attempt. Not a big deal here yet, but something to keep an eye on. All right, let's always talk a little bit about fear, and of course, as the VIX goes, as the market volatility diminishes, as the market goes up, the VXXB goes down, and it's an indication of fear. And really, we have no fear in the market. I would argue complacency. You tend to see that fear get lower as volatility compresses in the overall market. That's what we're seeing now. I think we could see this chart possibly break the downward trend line, especially if we get a break to the downside for the market, as volatility could be increasing. No sign of it yet, but something to watch for next week. So my ratings, US and Canada markets still long-term neutral, long-term neutral, short-term bullish. Gold neutral on both time frames. I've lowered my short-term rating from bullish to neutral, and oil neutral long-term, bullish short-term. Stocks remain in their upward trend, but below important resistance. The next leg of the move will depend on whether we get that break of the trend line, the upward trend line, or if we break out through resistance. And one way or the other, that'll probably telegraph the next leg of the trend. Gold is suffering from that break of its upward trend and could see some more weakness, although it's a little oversold coming into the start of next week, but looking out a few days or even weeks, we could see some more weakness. Oil saw a little bit of weakness, but hasn't broken its upward trend line yet, but it's all related to that strength in the US dollar. Volatility could be coming soon, so be watchful of the charts. All right, so let's do our stocks to watch session. And with stocks to watch, I'm always liking to run the Stockscores Market Scan in search of opportunity. And this week what I want to do is run the abnormal break scan on the Canadian market. And we'll go through, there's not too many charts, which is why I focused on the Canadian market, because we don't have a lot of charts to look at. And I'll highlight those that have some good potential, but also show you why some stocks are not worth considering as a bit of an education. So let's jump over to the Stockscores website. I'm going to select the Abnormal Breaks Canada market scan. Of course, we have an Abnormal Breaks US as well. Both scans are doing the same thing, just for different markets. We'll run the Canadian scan, only 12 stocks found, and we'll take a look at these charts. And I'm just going to highlight different things on these charts to demonstrate some principles that we want to keep in mind. So first chart is an energy company, and you can see its downward trend line was broken. We built a rising bottom, and on Friday tried to break out from that rising bottom. Now notice that there's a bit of a tail to that candle there. So that's a sign that there was some selling pressure into the close, a bit of a negative. Volume was good, pattern is pretty good. I just wish it had closed a little higher relative to its range for the day. So I'll give that a 6 out of 10. Next one, and we're not going to look at all of these. This ATP, this is a stock that the bus has already left the station. It gave its entry point back here when it broke out from an ascending triangle pattern. Good stock to hold still if you own it, but I wouldn't enter it here. Major drilling, we see a number of oil service companies showing some strength right now. In this case, I would say not significant breakout. You can see that the market tried to rally on Friday, but closed below its open. Volume was strong, but it's still stuck inside this trading range, and so that's not even worth considering yet. But the pattern is good if we can ultimately break out of that pattern, something to keep an eye on. Here's a stock that had a real abnormal day on Friday. You can see the big price jump with strong volume and broke out of this little trading range. The issue here, though, is that it's coming right into this resistance zone, and because of that, it's probably going to get stuck there. Now, the abnormal behavior is an indication that's positive, and so I would give it a 6 out of 10, but because it is bumping up against that resistance zone, I won't give it better than a 6 out of 10 because the probability of success is relatively low. Doral Industries, let's blow this chart up. This is also a good bottom fishing chart. We have the downward trend line that was broken. We've built the rising bottom, building something called a pennant pattern right there. And we broke on Friday with some pretty good price action, but notice the absence of volume. There's not a lot of volume supporting the price action, and that means that the crowd wasn't really rushing to the stock. So that lowers my rating of it. I would give this one a 6 out of 10. Interpipeline, we see a few pipeline stocks showing some strength lately, and you'll see another one in a moment. But again, downward trend line, that's been broken, build of a rising bottom, and Friday had a little bit of upward move, but volume was light. So that tells me it's more of a sector play as opposed to money being really interested in this company specifically. It was the sector that was attracting the buyers, but it fell off into the close, and therefore the buyers weren't committed into the end of the day, so we give that a 6 out of 10. Parkland Fuel. Downward trend line, break the downward trend line. Build of a rising bottom, that's the ascending triangle pattern. Very nice breakout from that pattern with good volume. So now, how far can it go before it hits resistance? Well, resistance is right about there. So we're looking at a stock with an entry around 40 with support maybe at 36 and change. In terms of risk reward, it's pretty borderline on whether we have the 2-to-1 risk reward ratio. So I wouldn't consider this a great trade. I do like the pattern. I'm going to give this a 7 out of 10, but it's not got great potential, and that's why I'm not giving it better than a 7 out of 10. Now, if you're looking for that large cap stock, relatively conservative, pays a yield, you're getting a 3.19% yield, and I would say decent potential for the stock to make 10 to 15% in the weeks and perhaps even months ahead. It's not bad. And so for the conservative investor looking for that sort of quality name in their retirement portfolio, something to consider. TFI, International, the chart here is just too choppy. You know, yes, we've broken the downward trend line, but we're not really showing a nice pattern there, so I'd give that a 5 out of 10. Here's another pipeline stock, but this is a case where the pipeline stock has left the station already. Its downward trend line was broken long ago, and we've had the rising bottoms underway for a while. This is a good stock to hold, also paying a nice yield, 4.7% historically anyway, and a little bit of a flag pattern break. This looks like it will continue higher, but initiating a position here is a little bit risky. I think it's more a case of a good place to add to a position if you started building that position back in the mid-40s. Equitable Group, blow this chart up. So you can see the breakout through resistance. That's great. It is not a break from low volatility. You can see the stock has been moving higher for a couple of weeks. That increases the chance that it will pull back before it goes higher. So I would rather wait for the pullback. You might be able to get this stock in the $68, $69 range rather than chase it here at 71 and change. Good stock longer term. If we look at the 3-year weekly chart, you can see that it's making an attempt anyway at breaking out of that longer term resistance downward trend line. But again, it probably goes lower before it goes higher, and I think I would wait for that pullback. And we got just a couple more on the other page here. So here is a stock that's well into its upward trend, and if you own it, I would stick with it. Obviously, it's in a nice upward trend, but no reason to initiate a position here because it's not starting its trend. You know, it started its trend back here with the break of that pullback line, or you could add to the position there, or add to the position there, or add there on all those pullback breaks. But now you're at the top of the channel, and so you're really paying a premium because you're at the top of the price pattern, not down at the bottom of the pattern when it's making its pullback in an upward trend line. So anytime you want to think about buying a stock that's in an upward trend, wait for its pullback to the trend line rather than chase it as it runs away. And finally, CGI Group. You can see here the upward trend in place, but this is actually what's called a rising wedge pattern. It shows that the buyers are losing their enthusiasm a little bit. It's actually a bearish pattern, but only if you break the upward trend line. So that's what you'd want to watch for. If you own this stock as a signal to sell it, watch for a break of this upward trend line, maybe down through $88, $87 a share. I don't see any reason to buy this stock now. There's no volume supporting the move higher. It remains a good hold until that upward trend line is broken, but I would not initiate a position there. So hopefully you found that valuable just to go through the thinking process of how I evaluate charts. Let's jump back to the presentation and look at our trade of the week. And this was an awesome trade on Friday. Very simple concept. I always talk about my day trades all hinge around my Stockscores action candle, something available to anyone who's taken my active trader program. You get access to this indicator, or with my active live service, you get to watch my screen as we pinpoint the stocks, making action candles in real time. Well, this stock made its action candle on the second bar of the day, the 934 candle, or sorry, the 932 candle. It actually made an action candle at 934 as well, but it made another one at 932. It's a little hard to read because there's some text over that. But that was the entry point, 932 at $2.93. For $100 of risk on the position required the purchase of 350 shares, which was a small position, only $1,026, and that's not even using leverage. Some brokers might not have let you use leverage on a stock under $3, so let's assume that you could not. Ultimately, the stock closed with a risk-reward ratio of 16.4. That means on your $1,000 of capital invested, you earned a $1,600 profit, a very nice 159% return. I'll say that again, a 159% return on your capital for a stock that you held for one day. These kind of trades don't come along very often. You maybe get 2 or 3 a month, but they do come along, and if you have the tools to find them, like that Stockscores action candle, it pays for itself over and over. Well, that has been the Stockscores Market Minutes for March 4th, 2019. Hope you found it valuable, educational. If so, please click on the like button, subscribe to the channel, and most importantly, trade well.